Hello and welcome to the paid weekly recap for the week ending September 12th, 2025. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the predictive AI for dynamic market system. Before we get started, normal disclosures: options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trade advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. If you need more time with the disclosures, please go ahead and pause the video here. Otherwise, we will get into the recap for the last week. So this week, a bit of a continuation in the 10-year yield, maintaining a lower level after breaching the 4.1 level for the 10-year yield. Broadly, expectations now are that the Fed can get more aggressive with lowering interest rates. And this week didn't really do anything to change that opinion. We had low PPI and in line with expectations CPI data. Now we do have the Fed meeting this week on the 17th. With that, we will get some commentary. And with that commentary, we will get a better sense of what the Fed is really thinking here for the rest of this year. And if they are thinking in line with the market and looking at aggressively lowering interest rates, yes, the 10-year yield is justified on their lower rate, but that could also set up some more confidence that they can spur economic growth as we've seen this low inflation information. And along with that, of course, we saw the market break out this week. So CPI and PPI did what they needed to do. Came in low enough that inflation's not a concern. The Fed is not handcuffed by high inflation. Market breaks out, closes near highs, makes a new high on Friday. A little bit of risk off near the close on Friday, perhaps in preparation for that Fed meeting. But generally speaking, we are breaking out to a new potential bull trend here. Can get derailed by the Fed this week. But as it currently stands, it looks like the expectation is that we go into a bull market. And the RSI is a little bit high here at nearly 68%, above 70, and I would expect some consolidation. So this would more likely than not be a rapid, aggressive rally unless positioning dictates that it needs to do that. So we may see a quick move to the upside, followed by some consolidation or a grind higher that allows that RSI to stay lower because a high RSI is generally indicative of an overbought market. Tech, our risk concentration, getting that money flow even better. So actually finished up on the day on Friday. We're seeing some interest in buying into risk, buying into growth. And when we see that tech leadership, that's generally considered a bull indication for the market. But again, the concern right now has to be that the Fed says something that derails this market. And after that, the next thing we're really looking at is, again, non-farm payrolls in a couple of weeks. So we've got fewer and fewer inputs right now that seem to be able to derail a bull market unless something surprising comes out at this point. Small caps, which have been shopping and getting some rotation into that sector, has slowed down a bit here, using the 10-day moving average as a support within this bull trend, but it's very choppy. We get an up day and then a little bit of sideways action for a week or so, and then an up day and then some sideways action. So right now we're in a chopping bull market here for small caps. We're not buying everything yet. And actually, that can be considered a positive for the market. When we see a market that is willing to buy everything, that can create concern that everybody's given into the bull market and we're just buying because everything goes up. Instead, there's still some selectivity out there, a little bit less aggressiveness into small caps on Friday, while there was a little more aggression into tech. That is a healthy bull market sign. Generally, I'd consider that a good thing. Finally, the VIX, just below 15% right now. The lows around 14 and a quarter. Fed does everything in line. I expect to see us drop below 14. Something derails this bull market, we could see back near 20. So right now the VIX is near lows, has a little bit of downside, but is providing some opportunities for some cheap options, cheap defined risk, cheap leverage. And again, that actually helps really well with a bull market because now I can protect myself just in case of a downward move. And that sets up well for this upcoming week. We've got a couple of new trade ideas coming out for paid. For last week, we had two ideas. Number one was Delta Airlines. Now on Thursday, Delta released some preliminary results that market took a little bit negatively. Bounced back, trading near the low part of the range. We've been kind of range bound between about 60 and 62. Thursday, it looked like we may take off out of that range, pun intended, but we didn't end up doing so. We ended up pulling back down, chopping back into the range, closing near the lows of the range. We just took the exit here. Nothing that was particularly exciting for Delta. Didn't get that follow through that may have come in had there not been their their earnings updates that they gave on Thursday, but it did lead to a loss. So the stock dropped from Tuesday morning on the open to Friday on the close, about 2.5, almost 3%. The options dropped about 28.5%. So this is the leverage component of those options. We had the defined risk, which was beneficial during the worst part of the dip, but the ultimate end result is that we didn't have the upside move. And so as a result, ended up with a negative result for the options themselves. On the other side, we had Google, Alphabet. Alphabet started off on Tuesday into that bull market trend. So Tuesday morning, it was looking a little bit weak after this big move that occurred last week. Tuesday started off a little bit weak, but by the close, made a new high. And then we tried to make new highs, chopping around there with that 85 RSI or 84.5 RSI. It's difficult for the market to really explode to the upside. But at the end of the day, with a 2.9% gain in the stock, similar downside to what we saw in Delta, we had a little bit higher return, 32.6% return on the options. So overall, a slight positive week, holding half the position in Google Alphabet for Monday, and looking at two new trade opportunities this week with some potential for some excitement here, particularly if the Fed says things that they should to keep the market, the bull market intact. And of course, make sure you're joining us for that live trading room. We always talk through some of these ideas, and we're going to be talking through what the Fed is doing and how the market's reacting to it as we go through this week. So if you have questions, always feel free to jump on. You can hit myself or Vlad with questions. We've got the morning bell from 9:15 till 10:15, 10:30 Eastern time every day, and the closing bell from 3 to 4 Eastern time every day. So make sure you're joining us for that conversation. And if you do need to reach out outside of those hours, you can always do so via email. I'm Keith at yellowtunnel.com and Vlad is Vlad at yellowtunnel.com. Thanks again, everybody, and looking forward to another great week for the paid system and for the markets.